Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday the 26th of September comes to you from London. And we start, as always, by looking at the dollar, and dollar index showing here nudging new highs, multi-week highs. We're just really coming back to the levels we saw at the end of August. So the big question is this a bottom? We've got a lot of work to do for that to be the case, and the trend is still very much down in the long and medium term charts. But the short term is looking more bullish, and we are just seeing some small upside targets here, about 1.2%. So nothing stellar, but the dollar is just moving higher, and that's reflected in the euro weakening. So we have got downside targets here of 1.8%. So we are just seeing the euro coming off the top here, rolling over. Again, the bull trend against the dollar, 115 would be the level that we'd need to break for that medium-term trend to be broken. So the targets aren't below that, so at the moment we're still bullish medium and long term for the euro, but the short term chart is pretty bearish. Looking at the Japanese yen, we're seeing here how the transition is occurring where the dollar is just strengthening. Long term and medium term charts not quite through yet, and we are just seeing the dollar falling off a little bit relative to the yen, so the yen strengthening. Remembering that the yen is a risk-on trade. Markets falling yesterday pretty much on the North Korea sentiment, and we are just seeing that yen strengthening as a risk-on trade. Sterling just looking a bit lower here against the dollar, just below the cloud now. A slight short-term target of 132 downside of 1.6%, but we are just seeing the medium-term chart still looking pretty bullish with that move that we saw over the last couple of weeks. Long-term, we've got to get through that 135 level and stay there quite convincingly. So we did get through, but it needs to hold that for a few weeks for it to be a bullish transition. Looking at sterling against the euro, we're seeing sterling has really strengthened here. That weaker euro coming through, and against the Swiss franc, we're also seeing sterling has been quite strong, but just back below the cloud again. The risk-on trade to the Swissy. Australian dollar sitting at the 170 level, sterling, so just another proxy for sterling looking quite strong at the moment. S&P 500 index sold off slightly yesterday, but the big story really was that the Nasdaq really fell very heavily, and so that we had strong falls at the open, and we're seeing tech having a real sell-off, and we've been talking about tech weakness for some time now, and the Dow just selling off a little bit there with that tech sell-off, and the Russell 2000 also just holding its own, looking a little bit better actually than some of the other indices. So the broader market's still looking okay. It's mostly US tech that's the worry. The S&P futures bearish in the short term, and the Nasdaq E-mini again we saw yesterday really big sell-offs here. So we are just short-term bearish on tech. FTSE 100 is still looking bearish below the cloud, so the UK market looking pretty bearish, and the FTSE 250 much the same. Stronger sterling at the moment, just having an impact there. The DAX just holding on after the German elections, surprisingly resilient really. And then if we look at the Nikkei 225, flat on a weaker yen, so down 1/3%, but that the stronger yen yesterday just having a little bit of an impact there. Hang Seng was up, but still bearish below the cloud, as is the Shanghai index. So we are just seeing the Chinese market still a bit weak, and the Sensex, the Indian market, also just selling off. The Australian market looking very weak below the cloud, and all of those downside targets still very much there. Brent crude made a 2-year high, so yesterday we saw big moves there, and so the crude oil price doing the reverse of what it normally does at this time of year. The seasonality weighs quite heavily on crude, but we are actually seeing new highs, testing really levels that we haven't seen since 2015, so into the high 50s, gunning for these targets of 59.12, 58.54. We're there now, and then we've got a bigger target of 72. So crude oil looking somewhat better, but there is an absence of short-term targets at the moment. And if we look at WTI, again, much the same picture. We do have a shorter-term target here of 53, so better upside. Brent really is making the highs. WTI crude is not. So there's a bit of a divergence there in the benchmarks. Natural gas, US nat gas, still holding below the $3 level at 2.94. Copper up quite strongly, and we are just seeing that up nearly 1% there, so that's looking pretty good. Gold had a very big jump yesterday. Again, the risk on trade, so that puts us back into bullish territory on the short-term chart, back above the 1300 level. So gold is still looking bullish on all three time frames. So that's one of the better looking charts at the moment. And silver did jump above the cloud as well. We've got an upside target here of 3.7%. Not quite bullish yet on the long-term chart, just a bit different from gold in that regard. US 10-year Treasury yields holding in the mid-220s, 2.23%. Apple continues to fall. We've said we've been worried about Apple. Continues to fall. Below the cloud now on the medium-term chart on the price is 150 level. If we fall below 145, that would be bearish medium term for Apple. Google also just bearish below the cloud, although it did recover somewhat yesterday. Amazon looking very bearish below the cloud, and this one has been worrying us as well. We've said Apple and Amazon. We're now through on the medium-term chart on Amazon, so that's not looking so good either. Facebook had a really big fall yesterday, a really big sell-off. It hasn't changed the medium and long-term picture, but boy oh boy, the short-term picture is looking pretty bearish there. We don't have any clear. We have one downside target of 159.92. That's nearly 2% downside, but we hopefully will find support on the cloud there at about 160. But a really big sell-off there yesterday, and Microsoft also sold off. So we are just seeing tech selling off quite dramatically short term, and we've said we've been worried with Amazon and Apple really dragging things down. That's it for today. Until tomorrow, happy charting. See you then.